Why? Because there's a trust fund in that kid's name. There's a domestic trust fund and there's a foreign trust fund. So I'm learning rules on like different trust type of trust accounts and all this stuff. And and when a child is going to college, some families would purchase a property instead of them staying in a dorm or whatever. They purchase the property so that it's a rental property. So things like that, it was blowing my mind. Like people are really, this is how wealth is managed outside of my immediate community.
Money is always uncomfortable to talk among your friends, but I want to say the taxes is kind of like the other layer that most women tend to avoid. But we are literally breaking that stigma today with my guest saying thank you so much for coming to the show. How are you?
Thank you. Thank you for having me. I love what you're doing with your community and making personal finance really a bit more personal. So I'm looking forward to diving in.
Thank you again. And I want to give a background on how we ended up meeting, and because I always like to give some chisme, which is a little bit of gossip to the audience. So I attended a money conference for the first time. And I was drawn to Sainte because of how well she just presented herself as a CPA, but also as someone who creates content around money. And I was just like, I need to get to know her. And we ended up being together at a round table talking about money and finances. And so that's how I met her. And since then, I'm just a big fan of the work that she does. So I want to start the podcast by talking to you about, tell us about when did you decide to become a CPA and why?
Yes. Okay. First, I'm going to let the people know she definitely represented as well. Okay. Especially for the Latina community. I love your branding and how consistent it is at all times. Like we know when we follow you, you represent your community through and through. And I love, love, love to see it. So to answer the question, how did I even think about becoming a CPA? So I'm originally from Haiti, and when we moved here, I knew I wanted to do something in business. I moved here when I was about in middle school, and so I knew I wanted to do business. When I got to college, I started in hospitality management, and pretty soon learned that this is not where I need to be. 'Cause, and for many reasons, and I'm sure the audience and some people may be deciding their career at times. So I'll tell you, when I started the classes, as much as in my mind, hospitality would be I graduate and I'm a top manager, director of like a huge hotel in Paris. That is not how it starts in hospitality. Okay. You have to pay your dues. You have to know how to do all the things, know how to like the dishes and all these things. And so I wasn't as attracted to that type of learning. And so I wasn't performing my best. And that happens for some of us. Sometimes you think you're not good and you're beating yourself up, but really just that thing is not what you should be doing. So I got to be in a class that was teaching about pots and pans. And I said, unacceptable, unacceptable. So there was that. And then I learned how much the starting salary was. So when I learned how much the starting salary was, I said, this is definitely not for me. My family is an immigrant family. I need a degree that pays me well from the get-go. That's how I ended up in accounting. And I just went to the College of Business and I asked, I want something that challenges me because I realized I need more challenge. And I needed something that started at least 50,000. And that was a couple years ago. And I said, I wanted it. That was 12 years ago. And I said, I wanted something that started out at 50,000 a year. That's how I ended up in accounting.
Love this story. And by the way, I'm a former hospitality professional, so I completely understand the analogy of the starting at the bottom and the pants and all of that, because that's exactly what I needed to do. But then I also realized, okay, that was my dream, childhood dream. Now I need to fulfill my adult dream, in which I am doing it right now through the podcast. I love how you shared that you are an immigrant, but also how it was so important for you to financially be able to help your family, because that is the story of our community as well. And so now you are helping professionals and specifically entrepreneurs to make sure that they understand the tax code, the tax law, and also the tax benefits of utilizing their business to keep what they earn. I want to start with you sharing a little bit about the biggest mistakes that entrepreneurs make when they're starting their business. And I'm not talking about the phase one, because you help high earners specifically. So what is the mistake that high earners are making when it comes to taxes?
Yes. Okay. So I'll tell you, when I just the first exposure to why tax planning is a thing. Soon after I decided I wanted to be an accounting major, I started interacting with one of the top four accounting firms. That's when I learned there's such a thing as the big four. That means they're in the entire world. These are the four largest companies in professional services. That's audit, accounting, and whatnot. And so I started being courted by three of them. I went with EY, and I was with them for about 10 years. But being with EY, that's when I learned, coming from, like you mentioned, an immigrant family. When we come here, we think tax season is like refund time. And that's when I learned that no, the wealthy, they plan ahead. There's not much surprises by tax time. And not only they plan ahead, they are very strategic on how they deal with finances. So I was learning, when there's a new grandchild born in the family, I was learning the name. Why? Because there's a trust fund in that kid's name. There's a domestic trust fund and there's a foreign trust fund. So I'm learning rules on like different trust type of trust accounts and all this stuff. And and when a child is going to college, some families would purchase a property instead of them staying in a dorm or whatever. They purchase the property so that it's a rental property. So things like that, it was blowing my mind. Like, people are really, this is how wealth is managed outside of my immediate community. And so now, to dive into the people that I now serve, I realize there are a lot of friends like myself who they are first gen wealth builders. We're the first in our bloodline that's building real wealth, right? And they don't have access to that. And they don't know like all the different tricks. And so they were just overpaying all the time. Like, they're just paying from what they know. And so now some of them become entrepreneurs. And some of the things when they hear about business owners, they think write offs. Like, it's a write off. You want to write off everything. And one of the biggest mistakes that I see a lot of times they make when they get into that world, they think that's the strategy. But truly, that's not. You want to build wealth. You don't want to just spend money. You don't want to go around and buy a G-Wagon and buy all this fancy car just because so you don't have to pay a lot in taxes. Because that's not building wealth. You're just expensing. Now there's still no money left because that money has to go, right? So I would say that is one of the biggest mistake that I see in entrepreneurs that are they're making a lot and they're trying to reduce their tax bill, and they're going at it as an expense perspective instead of real strategies, which we can get into later.
I'm like, where is my bigger notebook? Because this is so good. First of all, you just give us so many nuggets on the mindset of tax season is I get a refund versus tax season is I'm already done and I've already leveraged the things that I need to build wealth. I think that was like, hello. Yes, please tell us more about that. And you also talk about the write offs. Why do you think, or who do you think is misinforming our communities about this mindset of just write it off? Just write it off.
Yeah. I think I really started hearing that about 2 years ago on social media. Everyone was talking about write-offs, right? And the concept is that they're thinking, for example, an Amazon, they're like such a huge corporation and they're not paying taxes, right? But Amazon, and those would be the type of companies that I'm working on when I was at EY. And Amazon, the reason they're not paying taxes, in the end, they show that they have a huge loss, but it's because they're investing in huge equipments. The depreciation is what's bringing them in that. That doesn't mean the business is not actually making book income. There's such a thing as book income versus tax income. And so book income, they still have large revenue. They have metrics that they're meeting, but it's just for tax purposes. There are certain benefits that they're tapping into, like the government, the IRS, whenever they want to encourage something, they have incentives in it. So when they want to encourage companies to invest in equipment and machinery, so part of the incentive is they allow bonus depreciation. And so that's something that, yes, the community heard about it and they got on it. It's not a bad thing, but that is not their only strategy. They're not just actually only living in losses. They're investing these things and they're using and they're tapping into interest expense for this loan that they now can use. And they're also investing in other things that's cash flowing. So I don't know if that answered the question, but I got into it.
Yeah. So my one of the questions that I had for you is how can entrepreneurs really embody this idea that cash flow equals health for their business? Because sometimes I don't think people understand the benefits of cash flow forecasting and understanding why it's so important to work with someone like you that not only educates them in what it means to have a healthy business, but also the law and the opportunities. So let's talk about cash flow since you mentioned that.
Yes. Okay. So one of the things we've heard, and I love your last name, cash is king, because you don't want to be, yes, it's great to have assets that's going for you, but cash is king. There are certain decisions that need to be made in a certain timeline. If you don't have cash, it can keep you out of the next opportunity, the next investment. And so the saying cash is king truly is true. So that's why certain organizations or large corporations, they would operate on some debt, right? But it's not just they're taking debt just because there's a strategy behind that, because they can get the capital, the working capital to do certain things so that they can preserve their cash. And effort to make sure that payroll, you cannot, you still need to run payroll if you're a large company or you're not going to have people working for you. There are certain things that you need the cash there. So in an effort to make sure you have enough cash in reserve, sometimes it's good to tap into a working capital loan with the intention of paying it back. But now you can tap into interest expense, which is deductible versus the loan, the principal of the loan itself is not. So there are different things to keep in mind. I guess to shorten, the main thing I want you to keep in mind is that you don't want to be cash poor in your business. You want to retain some type of reserve. Should the client not, their invoice not clear in time or whatever, your business still is running. So you want to keep that. But at the same time, being mindful of how are you strategically leveraging debt.
You talk about debt, and I am totally going to talk about this. But before we get there to debt, one of the things that I see a lot, and I don't know if you see this with the clients that you serve, is this mindset of tomorrow when it comes to paying themselves through the business. With the clients that you serve, do you see that same pattern happening with high earners?
So I have seen that, or sometimes it's the opposite, where they're taking so much money out. So recently I had a new client, and she's was telling me I think the business made, she has her husband make like 800,000. So this is the part where you're like, let me just explore things, right? And her business made about 100,000, and clearly she needs to make an S corp election. There's different times to consider that, and we can get into that if you want. But the type of entity matters. That's another big mistake, not knowing when to revisit how your business is structured, right? So, and her thing, when we start talking about the S corp election, now you have to run payroll. And in running payroll, she was telling me, well, I think I took this much out. The amount that she told me, we said payroll, an average, just tidbit for your community to know, an average, once you are an S corp, now you have to run a reasonable salary for yourself. Or the IRS, you don't want to show that you're avoiding taxes, right? It's so you want to you there has part of the rule is that as an S corp you have to have reasonable salary. And I guess standard to know is that on average that's about 40% of your net income. So based on what we had, we said we can support her paying herself 40,000. She goes, "Okay, Saint, I did my research and I took out like 150,000 as my distribution." And I said, "Well, I don't know how the business has net income of 112 and then you have distribution of 150. Was there debt somewhere in there?" And then that's when she's telling me, "Oh yeah, I took some, I was leveraging some debt, which is completely okay. But the key thing I want you to keep in mind here is that sometimes because they see the cash, they think it's all mine and they forgot there's a whole debt that they've been leveraging. So you want to make sure, and now you're about to end up, because if you take out more than the capital that you had in the business, that excess triggers capital gain tax. So you don't want to be paying tax on money that wasn't true earnings to begin with. So being mindful of that. And that's why it matters to have to work with someone who can see the full picture and be able to ask you questions that you may not have been. I don't think she was avoiding telling me. It's not top of mind. But it's me asking those questions because I know if I see this, then this must be true. To ask we have this thing we say, better questions, better answers. We'll be able to help the client give us the full picture.
I love these. I'm thinking there's so many things I want to ask you because you work with high earners that maybe, and maybe you can tell me as well, give me some scoop into the behind the scenes of what is their relationship with debt as high earners? Because our community has struggled so much with the even the thought of I need to leverage debt, like we're told that debt is like you never touch it, you never use it. I personally leverage debt to start investing and build my wealth, which I have a healthy relationship with debt. But I'm curious to know, where do your clients sustain? Are they just like, yeah, debt, come on, I need you.
Yeah. So thank you for saying that because I know a lot of people in our community listen to Dave Ramsey and kudos to him. And I love that you said a healthy relationship because there are people, maybe they were introduced to credit cards too early. They didn't know all the risks, the 28%. They didn't know so much interest would be accruing and they had a terrible past with it or whatnot. And in the healing process, they were told to hate debt. And one thing that I say is that coming from a corporation where those large companies were the companies I was in charge of their compliance, the Amazons, these large companies, they all have liabilities on their in their balance sheet. You cannot like not to say you cannot, but to get further faster, debt leverage in a healthy way is it of course don't do it by yourself. You want to make sure you talk to some professionals at times to make sure you have clear projections and why you're taking this debt and the what's the purpose for that. But it is absolutely important. And I love that you're telling your community if you are growing a business, you need to leverage that. In regards to my clients, I have seen both sides. I have seen some, again, they are individuals who are former corporate people who end up starting their law practice or whatnot. So they may have had the bad or heard the bad experience or have had bad experience with that. And so they're either staying away from it completely or what I have a client in mind actually. She uses like an Amex, but she thought I have to pay it off completely every month, right? She didn't want it to accrue any interest, which is okay at times. But the first time that she had to actually leverage that because she needed cushion for 2, 3 months, she was freaking out. And I had to be like, you are okay. Your business is making, in your toughest year, your business is making 600K, right? This is serving its purpose. That's what it's there for. So I have seen where there's that hesitance. And then I have seen others where I'm like, it makes no sense for you to be paying all this interest expense. Like you have cash sitting there that's not earning that much when you can be bringing this balance lower, right? At times. So I've seen both. It really depends on what their personal relationship with money was. And that trickles over into the business unless they've been working with a professional from the get go to kind of help them balance it out.
I want to say this conversation just feels so abundant in the knowledge that you're sharing with us, but also the possibilities. Would you mind sharing what type of industries are your clients in? Because you're talking about 600, you're talking about 800, you're talking about people paying 125 and all of these things, right? And for our community, those figures might feel like I'm never going to get there, right? So would you mind giving us an insight of what type of industries do you serve?
Yeah. So a lot of my clients are attorneys with their law practice. And amazingly enough, most of my clients are women killing it in their game, right? So we have a lot of attorneys. We have some doctors with their practices. And I have one who her business, she left corporate like last year was her first full year in corporate and she ended the year at like 300-400K. And she's in lobbyist. She's a lobbyist. So it and and I have a woman who's in the seven figure and she's in construction, a woman in construction, killing it. So yeah, staffing, it kind of varies. But a lot of there are people in different industries making that type of money, but my clients, they're attorneys, doctors, and there are some consultants, right? Whether you're a lobbyist or the construction person. Yeah, I see they're doing extremely well. And I'm so excited. That's one of the reasons I went on my own. Like working for EY, I got all the excitement and I'm a fan of people starting in corporate, starting with the best so that you can learn how the best serves and what the best pays attention to, right? I think that is absolutely great. I love that I spent that time with EY. But for me, in this season, I love that I can literally be even more invested in my clients because I'm seeing them take that journey. I'm seeing some of them jumping from corporate, starting their business, and then first year you're ending at 200K. That's the market saying, yes, we needed what you're offering as a market, and that validation. So yeah, I love it.
And I love that you are working primarily with women. And when I was scrolling through your Instagram and website, I truly love how intentional you're also building your community because primarily is women of color. And I'm just like, oh my God. Like when I'm thinking about high earners, and this is a mindset that I used to have, I always used to think of a male, like, oh, a high earner is a male. And then when I started to get to know you and learn about the work that you do, I was thinking like, wait a minute. That's all that's shifting too. Can also be high earners. So I really appreciate this conversation. Now I want to talk about the changes that are coming for the new tax law that is here,
Mhm.
the big, beautiful bill. How do you foresee that benefiting specifically the high earners?
Okay, the one big beautiful bill, there are some things that they Trump initially introduced with his first term. And this time around, the one big beautiful bill solidified it, either made them permanent. Things like bonus depreciation. It was slowly winding down and now it's back. It's back 100%. So that's something that impacts earners or especially business owners because we're investing in equipment, machinery, and all these things, right? So that's a good thing that's not going away or that's been made permanent. Another one I would say is the QBI, qualified business income deduction. And so it's good for mid to high level for high earners because once you make too much, you're out of it, but it's still really great for solopreneurs or S corps, single member S corps. Essentially, that's a 20% and deduction that's allowed. So typically, let's say you have an LLC and you're the only owner, it flows through to your personal tax return. Same for an S corp; those things don't pay taxes; they flow through to the owner. And so at the top, in addition to the expenses that the business naturally had, just like in your personal tax return, you have standard deduction. Well, they allow a 20% deduction excess for that business net income. So that was a good thing that was introduced with his first administration and now it's back. Now I do want to note there's a limit, there's a threshold. Once you hit that threshold, that the qualified business income may no longer qualify for you, especially in specific trades. So doctors, attorneys, I have some clients that have completely phased out of that and they no longer get to tap into it. But that's when we have things like other strategic planning that are necessary. Once you are at that level where you're at the 37% bracket, there's way more strategies available for you. And we can talk about those things. So once you start phasing out of many of those regular things, it's a sign that you need to be talking tax strategy at a higher level.
And I love this. Is one of those strategies like shifting from an LLC to an S corp, or what are some of the things that you're recommending your clients? And of course, this is just based on a pretend scenario.
Yeah, pretend scenario, no tax advice because things can be very personal. But on average we're saying if your business LLC is at the 45,000 or so net income, that gross, when you take out all the expenses, when you're ending at that net of 45K, you want to start thinking about that S corp election or talk to a CPA so they can run the numbers for you to tell you. If you make the S corp election, like we have a software where we can do it quickly on a call with you within like 20 like within minutes, show you what's if you make the S corp election, this is how much it would save you in taxes in this year, right? And if the savings is 10,000 or more, yes, we're game. But these are also I still consider those foundational strategies. There are things like I won't dive too deep into it, but solar tax equity at a certain point of time, solar projects were being pushed. So there are some incentives that were put in place. And one of those was that you get a 30% tax credit for solar investments. Now the average person is not going and putting up solar projects, but there are funds, large funds that raise capitals, just like I'm sure you've heard of real estate investment trust, REITs. So you're not going to buy the real estate, but you can invest in a REIT, right? And so there are funds that raise capital for such projects. So, and we partner with some of those funds where some of our clients tapped into this last year because you can go as far back as 3 years to essentially, instead of telling the IRS allows you, instead of paying them the tax that you owe, that is owed to them, you can use that money towards such projects, right? And this is one of those things I start thinking in my mind, that's how money stays with money because someone with like this is something that benefits people with money. And that's who have access to it. But essentially, one of the funds we're working with for 2025, their minimum contribution was 105,000. And a lot of our clients in 1 year they were paying $105,000 in taxes. But this thing allows you to accumulate up to 3 years. So we had some clients over the course of 3 years, we got this 105. And essentially, when I'm filing their tax return this year for 2025, there's a form we include in there. The money that they've paid will get refunded to them, and that money will be invested in those projects. That what that does, because that project is purchasing equipment, so now they get to take advantage in a large depreciation for 2025. So, and it's money that they didn't have to take out. They didn't have to take cash. They didn't have to touch their cash flow. It was money they've already paid to the IRS that's going to be invested in such projects. There are funds that allow you to gain return on investment on that. There are funds that, well, instead of the return on investment, they give you a huge benefit by allowing you to be a majority partner so you can take advantage of this huge depreciation. I don't want to confuse the people by getting too
Girl,
deep.
no, like I'm literally listening to you and I'm taking notes and I'm like, this is such a, I mean, beyond the education and the flowers that I already give you, I'm thinking about how every level of growth and every level of wealth also requires to have a conversation, even with another CPA. The things that you're telling me right now, I'm implementing some of those strategies myself. But even right now, throughout this conversation, I'm like, oh, let me write it down so I can ask somebody else about this, right? Meaning the accountant that we use. But just the mindset of, A, your earning potential is really up to you. And then two is, how can I get in the right room with the right people so I can continue to learn, right? Because every level requires a new set of skill sets. Like in your case, I have had different CPAs come to the show, but they're also helping the people that are just getting started, right? Where you're already at another level and you're like, no, like my clients are making all this money, which also gives us the opportunity to see what is possible for women in general. And also the importance of continue education is so powerful, not in terms of I'm going to go and get these accounting books and learning myself, but just having that one-on-one with people like you and talking about, hey, here's what I did, here are my goals, here's where I'm going. Like that right there is a good example of why collective knowledge also builds well. So you're not overwhelming me by any means. You're not gonna go to overwhelm my listeners or the viewers because that's the kind of education that we need. So if anything, I want to thank you for just giving us so much knowledge right now in a way that it's very digestible, by the way. And I'm excited. Like I want to learn more. So
Yeah. Can I add to what you just said?
yes, please.
Continued learning. So, two things. You said two things. The continued learning is important and being in the right room. And there are a lot of, first of all, being a CPA, it takes hard work to pass the exam and great, right? So, it doesn't mean someone is not a great CPA if they're not presenting certain strategies to you, because a lot of what we learn is to be compliant, right? So they're filing your return properly, but that doesn't mean because you're working with a CPA, being they're applying strategies to help you reduce your taxes, because that's not their first goal. Their first goal is to make sure that you are compliant, that they're reporting what they're supposed to, so you don't end up in jail and they don't end up in jail, right? But me being in the right room also, it allowed me to make those connections to find those funds that are raising capital for this type of stuff. So it's not enough. And sometimes they either, the CPA didn't bring it to you because either they didn't know about it, and then that's fine. You bring them, they'll ask questions like, oh, what's the tax code to support this? And I'll tell them, they go and check and they're like, yeah, this is good. But what they presented to their clients, maybe not, because now it's just overwhelming because the client doesn't know what to do next with this information. So it helped for me. It was being in the right room to make those connections, those relationships. I paid to be in certain spaces so that we have access to so when I tell a client of a strategy, you don't go and figure it out. We have the third party. If we tell you about cost segregation, and I know you're probably invested in real estate, we tell you about a cost seg, you don't have to worry about finding the engineer that's going to come in the home and determine what this report needs to be. We have those relationships. So the continued education happens within your field, but also with other people. The next step, the investors, the fund, all these things. So, and meeting you, we had a talk, and I'll give you a little, I don't know if it's chisme you said, gaslight, hype you up a bit. We had a call, your method and what you do and how you manage your brand and your appearance and visibility. It is something to be studied. It was amazing. And I need to be, so I'm so thankful I was in the room to meet you. And so, yeah, the learning, it doesn't just happen in your particular field, it's happening all around. So you need to be in rooms with people who are in the same field as you and other fields that are doing great things in their fields.
Yes, absolutely. Thank you so much for those nice words. I truly honored that you're here, and I want to open the opportunity for you to also invite people to work with you and also talk about the event that you have where you're helping more women strategize the law and the tax to really keep what they're earning.
Yes. So we have these brunches. So first of all, we have this planner. Let me just pull it up. It comes in this beautiful box, the My Amplified Year Planner. And so really I created it because I wanted something that keeps tax deadlines top of mind. Also because the ambitious women, we like a lot of times we like writing things down because there's so many things happening at once. And sometimes it's just good to write it down so you don't forget it. And so these brunches were made so that people can come together, yes, look good, eat great food, but also let's put pen to paper on what the blueprint is for this year. So, and doing those, I also go over some tax strategies that maybe they weren't thinking about, but like you just said, giving some examples, just let people know what's possible, what type of income people are earning. And so that's why we're having those brunches. So we have them in the first quarter of the year and the last quarter of the year. So the one coming up is happening on January 17th, and it's in North Miami, Florida. And it's gonna be just amazing. We have a chef prepared lunch, brunch. We have some amazing panelists. We usually have at least one person that basically sign the decision on funding businesses. So last time we had one of the VP for Bank of America, and this time we're having one of the directors for, I think it's called the Black Investment Fund. Black Business Investment Fund. And I think during her time, she's overseen $19 million given to small business owners. So
That's
that's
awesome.
one of the panelists. We have a doctor, young doctor. I feel like she's lived like four lives because she's done so many amazing things in her life. And she has two practices. Her and her husband are both physicians. And so she's going to be there. And the third person is an attorney also doing some amazing work. But we have those people, one, so they can share their journey, how they got there. Also, if they're in the funding space, what makes them want to give money to you? So we put you in the room. The room is a network and you get to
Yeah.
talk to them directly. And so that's what these brunches are about. So yes, the first one is January 17th. The next one is October 4th, I believe. And definitely you want to be in the room.
And
Mm.
I
Ooh. Oh, first thing that came to mind is freedom. It's just the freedom to say yes to the things your heart want to say yes to, and being able to say no to the things that just you don't want to do, and you don't have to suffer through it because you just need the money, right? So that's what I would say. Thank you.